Hello and welcome back to our Investing Fundamentals series here on Gabelli TV. If you're just tuning in for the first time, I'm McQuillen, Assistant Vice President on the Private Wealth team here at GAMCO. Today the topic is turnover, and not the turnover you hear when watching basketball or football. When it comes to an equity portfolio, turnover refers to the frequency with which assets are bought and sold within the portfolio over a specific period, typically measured as a percentage of the portfolio's turnover holdings. High turnover indicates frequent trading activity where assets are bought and sold rapidly, often driven by market fluctuations, investment strategies, or attempts to capitalize on short-term price movements. Quantitative, algorithmic, and momentum traders are prime examples of investor types who typically have high turnover. While this approach can potentially generate quick profits or mitigate losses in volatile markets, it also entails higher transaction costs, including brokerage fees and taxes, which can erode overall market returns. Moreover, excessive turnover may indicate a lack of cohesive long-term strategy, potentially exposing the portfolio to increased market risk and reducing the effectiveness of tax strategies like capital gains management. Conversely, a low turnover rate suggests a more conservative approach where investments are held for longer periods. This strategy is often associated with a buy and hold philosophy aimed at capturing long-term growth and minimizing transaction costs. Lower turnover portfolios may benefit from reduced tax liabilities and greater consistency in investment returns over time. However, such strategies require patience and discipline to weather market fluctuations without being subject to short-term volatility. Most value investors, along with index funds, typically have very little turnover in comparison to the traders we previously mentioned. Ultimately, the optimal turnover rate for an equity portfolio depends on individual investment goals, risk tolerance, and investment time horizon, striking a balance between active management and long-term stability. As always, please reach out to a trusted advisor or your relationship manager here at Gabelli if you have any questions on the topic of turnover. If you are looking to learn more, I also have 20 episodes on this channel to help you build a foundational understanding of investing. Thank you for joining us, and we will see you next week.